Hello and welcome to BQ Prime. There's a new class of investors which is emerging in India, which is the family offices. And today we are going to discuss family offices, how they've originated and how they've evolved over a period of time. And to discuss that today, I have Mr. J. Rupani, who is head of Dinesh Hinduja Family Office. He's also the founder and chairman of IKEA Connect, a network of professionals who manage many of the family offices. Uh, Jay, thank you very much for joining us on BQ Prime. Uh, to begin with, Jay, uh, just for the people who are not aware of a family office, how do you define a family office?
Sure. So family office is simple. It's a collective of individuals that have been hired and put into a separate entity to manage the wealth of a distinguished person or a distinguished family. Typically, this is formed after a liquidity event. So a promoter who's worked for 40 years, built a large business, and over the last 20 years, we've seen a lot of these businesses who are promoter-led who have reached, maybe the promoter is 65, 70 years old. The next gen wants to do other things. The business has got a great brand value and is running well. It looks to exit to a private equity player who takes over the business. And the promoter gets sort of a liquidity cash rich event. At that point, the promoter brings together a bunch of folks, some investment folks, maybe tax, legal folks together into a small entity separate of him to manage his wealth, to manage the
Mhm.
wealth. Also, I think, Sajit, there are other aspects to it besides just investing and managing wealth. So maybe I'll spend a couple of minutes on that.
Hmm.
That what does a family office also do, right?
That's
So
right. So, what is the role of a family office eventually? Because it's investing or fund management can be done by wealth managers as well, but there is a specific role a family office has.
that's
Uh, so, what is that role, and how has that role evolved over a period of time in India?
sure. So I think a family office role is very broad, and it also depends on what the patriarch or the matriarch, the person who sold their business, the promoter, desires to do. So there are promoters that may have exited $1 billion business that say that, I only want to invest in a tax-free bond, for example. So they will buy a tax-free bond at 5% or 6% and sit down and they say, if I can make 600, whatever, on a 7,000 crores, if I can make 6%, doing nothing and sleeping in my house, and I have no risk, then frankly, they don't need a family office. Then that one accountant who can just look at the papers and monitor these different buckets is good enough. But then there are other families that say, say there are three different wings to the family. There were three brothers. They own a lot of properties together. They own a lot of financial assets. There is a next generation that are cousins. Now, typically, when a business exits like this, everyone separates and gets their own cash, right? They get their own liquidity. Now, they may desire different things. Somebody may want to just put tax-free bonds. Somebody who wants to say, listen, I have spent 40, 50 years of my life building this corpus. I want security of my money. I want it to grow as well. I want my succession planning done. I want to ensure that my children are well taken care of. My grandchildren are well taken care of, right? So I want beyond my lifetime, how does my family grow beyond? Right? How do they invest well? How do they live well? How do they contribute well? Philanthropic exploits, right? There's a lot of good things happening as well. It's not that today promoters are saying, I made so much money, I'm going to keep it all to myself. They're actually saying, how can I improve the conditions of people working in factories? They're willing to spend money. They're willing to educate the girl child. They're willing to educate children. They're willing to put up hospitals and do philanthropic stuff. So it's phenomenal. So now if you see the scale, it can really expand. In this, one part of it, which is frankly the most talked about part, is always money, is the investments part. And so there's always a very strong core which says investments have to be managed And when they are managed, they have to you look at three different things. You look at returns, you look at risk, and you look at liquidity. You have to invest with that horizon, right? Because you can sometimes have a great return, but the money is locked in for 10 years. What are you going to do? So, as the head, you have to kind of figure out, how do I make a portfolio that is looking at these three aspects. So it can be a very simple setup or it can be a very complicated setup. Just depends on
So,
the needs.
so when does a entrepreneur decide to set up a family office? Is there a minimum corpus you need to reach in terms of liquidity or cash before you say, okay, now I should be setting up a family office and look at these avenues or look at this planning?
So
At the end of it, it's wealth planning which is happening, right?
yeah, so I think it's wealth planning is the right word. Wealth and succession of the wealth over time. Plus, it's also a lot of day-to-day management where it comes down to managing liabilities, internal structures of companies, ensuring that now children are going abroad. What are the regulation? Can the children be directors on the company in India? Right. So there's a lot of complexity as the wealth grows, the desires also grow. People want to set up a factory in Germany. Now, how do I take $50 million to Germany, right? To set up that. What are the regulations? So, family office guys get involved in a lot of this. There's a joint venture we want to do with a beverage company. I may be Pepsi. I may be a Pepsi substitute in India, but I want to do a JV with somebody. Now I'm worth $500 million. I want to do something with them. So, typically, the family office investment team will get involved in that, right? So, I think patriarchs or promoters get involved at different times based on their needs of money. So if a business is very actively growing and money is deployed into that business and the returns are very good, then the promoter will say, why should I remove any money from this to create a separate family office? But a lot of the promoters today of large businesses where they are 1 billion plus in net worth are starting to do that because they're realizing that they have to de-risk themselves. They spend 50 years of their life, all their money in a company. It could be public, it could be private. So they're slowly taking out some elements of that where it's extra money to secure their family. So it starts off with maybe a $20 million tranche, and then every year they keep adding so that it starts building to a nice corpus. But what we have largely seen is that real family offices start once there's an exit, right? Where people have at least $100 million net in their hands to invest. Because at that $100 million threshold in India, you can set up a very nice team. You can have a CIO, you can have vice presidents for investment, analysts, associates. It's actually you're running a mini fund. So you're able to do that at that threshold.
It's like a prop fund, to
Yeah,
put it.
basically it's a prop fund of investments for one client.
So, when you're setting up a family office, what is the kind of structures that one have in mind, or what are the routes available for structures that you can do?
So again, there are multiple, and again depends on what the needs are. So you will hear this very often in family offices. It all depends on the family, and so typically people are structured as simple as a limited liability partnership. You could have a private limited company as well. Several of them who want to do investments in credit will have an NBFC because that's the regulation required. Uh, Folks that are now planning for multi-generational wealth transfer set up trusts, and the trusts are set up in such a way where the main patriarch actually gives away the wealth to his children and the grandchildren, right, and his wife. And then over time, the family office actually manages all those separate buckets of wealth based on the needs of those people. So, for example, a child who's 3 years old or 5 years old, he doesn't need money. He's been looked after by his parents, right? So, a grandchild could actually be almost 100% equity all the time till he hits 18 and he has to go to college and he needs to use that trust money to pay for his college tuition, right? And then he can do something with that capital, whether he does a startup, whether he buys a house, a car, he wants to live in San Francisco, New York, wherever. It allows them flexibility in their journeys. So multiple structures available.
What about the class of investments? Uh, where all family offices can invest? Is there a thumb rule of how much you need to invest in equity, debt, real estate, gold, silver, or any other asset class which
Yeah.
is there?
So I think family offices invest across all asset classes. They are opportunistic. The one beauty of it is they are long-term investors. They don't need the money. The money is enough to run multi-generational. The big concern always is how do I preserve my capital? No family office wants to lose money. That's the first criteria. By doing this investment, will I lose money? Right. So there's always a core set of investments in the portfolio that ensure that safety and security of the family comes first. Because they've spent 50 years building this money, they really don't want to go back to start. So that's the first psychological thought, right? So let's just say it's 100 rupees. So typically you will see that 50 rupees is either mixed in gold, commodities, real estate, debt instruments. You will see that that is always anchored. Some people may have that going all the way to 80%, but you will see at least about 40-50% as an anchor that even if hell breaks loose, you know 50% of your wealth is safe, right?
Hmm.
Then you will find people who do more public equities, where on average you're looking at a 12 to 14% return over long periods. Then you'll find another layer which says about 10% into alternatives. Today, with the next gen members coming back from the US, having global exposure, there's a big interest in doing angel investing, direct investing, right? And we've seen a lot of success stories in the last 3 years in India, where family offices have invested and made 100x on one trade, right? And that's what's exciting the next generation. A lot of them have done work across at Goldman Sachs, Morgan Stanley. They come with a lot of great knowledge. They have money and they're ready to invest. So we're seeing the next gen guys in the family taking that 10% and expanding that.
Hmm.
Some themselves, they collaborate a lot. They work with other family offices to do investments, and they like to do stuff that's green energy, climate tech, right? Venture. The new thing is direct to consumer, right? So I think gold also has a place in that equation, and now we're seeing even crypto showing up. Of course, crypto has regulations, and so everybody has been. I would say people are looking at it, but not really going deep, right? They can't.
Hmm.
They want to stay on the right side of the law.
So, what could be the average ticket size for a family office when they look at angel investing or a private equity investing compared to a normal private equity player whose ticket size would be say a 50 to $100 million or 150 in large cases much more than that. So when family offices come together, what could be the average ticket size for them?
So again, depends. So if you are a $1 billion family office, then you're writing on average a minimum of a $15 million. So let's just say it's a $1 billion family office. 20% of it is private investments, 200 million. So they also think just like a PEVC fund. 200 million is your corpus. I want to do 15 deals a year, right? So roughly about 15 million each deal, right? 12 between 10 to 12 deals a year, and that's the structure. Now, if you're talking about $100 million office, obviously it shrinks. It becomes a $1 million ticket per deal, and you're doing 12 to 15 a year. So,
What about liquidity of those deals? Because you put in 10 to 15 million dollars, and the gestation period is 7 to 10 years. After 4 or 5 years, you have already invested everything, and then you're waiting for the return or secondary exits, which is happening. So, how does a family office negotiate that kind of situation?
it's a balance. So a lot of them have cash flows coming from outside. So while the $1 billion may be deployable capital, they actually have other investments coming in. So say assume $800 million is in assets that yield income. So on 800 million, if you are generating even 10%, That's 80 million a year coming out, right? So
Hmm.
you realize that there is always liquidity coming in, which also has to be deployed. So, and you will not deploy 200 million in 1 year. You will deploy 200 million over 3 to 4 years.
Hmm.
So you need, on average, you will need about 50 million for privates every year. You'll
Okay.
do 3 to 4 deals a year because you also are worried about economic cycles, interest rates, different
Hmm.
flavors of the year. Some deals are good, like maybe everyone jumped into solar earlier, 5 years ago. Then they jumped into EV. Now they jumped into crypto. You realize that investing over time actually is a very safe, diversified strategy.
Hmm.
Putting everything in 1 year is definitely not the way to go.
So when you say liquidity, you're talking about net worth of the individuals, or you're talking about liquidity, hard cash, which is available with the family office.
So typically, globally expected standard is liquidity that is available to invest, not the net worth. Net worth could be much higher. But I think if you really want to be a serious family office, then you need actual liquidity of at least 100 million. In
Hmm.
India, maybe you could do a little less, but internationally, at 100 million also, you are not meaningful because you are constrained. You still can't hire the right talent. Internationally, the costs are much higher. So, if someone has to set up in New York or London, then I would say at least 350 to 400 million dollars needs to be around as investable corpus for this to be running as a formal structure, doing all the things they need to do, paying the right salaries, bonuses, getting the right returns, right? So that's the typical structure.
So what could be? So it's basically a cost center within a family. Uh, so if I have to look at it from a point of view, okay, if it's a cost center, what percentage of the total returns normally it account for?
So
If someone
typically,
wants to plan it over a period of few years,
yeah,
how do you plan that cost center?
yeah. So typically, what we have seen from international benchmarks, if you are in the 250, $300 million range, your costs are about 0.8% of your corpus. So,
Okay.
I think you got to be 300 million. Now, of course, if you drop to 100 million, maybe your costs are 125, so 1.25%.
Hmm.
But most families, and I think India anyway, we are frugal by design. And so we're very cost conscious. And so I think in India, even at 100 million, if you take 1% of that, which is about $1 million, you can still run a fairly decent outfit with a good set of people who are, good custodians of the wealth, doing all the stuff you need. Again, you have to understand these are small teams. You got 5 people, 4 people running it, one senior resource that's the most expensive, right? But otherwise, everyone else is, really getting support, really supporting that main resource.
Hmm. So if we have to look at India, how big is it now in terms of family offices? How many family offices are there? Approximate, because we don't have industry number like any other thing. So, if you can give us a perspective of that.
Sure. So, I mean, the last time we were doing just a rough estimate internally among friends, we looked at about 300 or so family offices. A lot of them are not known, right? They are part of a $10 billion public company that's kept half a billion outside, right? For the promoter, or has just started doing 100 million. So I think we're at very early stages. So I think if you say organized people who call themselves family offices, my guess would be under 100. But people who could potentially set up one and do it right, probably close to 300, if not more. Because I think a lot of, even tier two, tier three towns have
Hmm.
a lot of strong promoters, built very good businesses, but have not, are happy how they're running. For them, running their business, they're comfortable, they know it every day, they've driven it. Now to think that now I need to pull out some capital to keep aside for, family office is a slow journey. So we're seeing that today. On average, I think I'm talking to a new founder or promoter every 2 weeks who's saying, I'm going to exit in 3 months. I'm getting 20 calls a day from wealth managers who already know about my exit. How should I plan? What should I look at? And who should I partner with to manage this money?
Of the 300 odd which is there in India, what how many of them will be organized in a family of office manner?
I would say about between 50 and 100.
That's
Um,
it.
yeah, I would not. The serious folks are limited,
Hmm.
because a lot of it is driven top down. So it's also the desire, like I said, of the patriarch or matriarch to say, what do I want to do? And what is happening is the sophistication is increasing. So today you see family office professionals being in high demand because everybody wants to set up one. It's sometimes becomes a bit of a cachet. It's more of a social thing. Oh, I have a family office. So, but the reality is, what does that office do, and what is the command they have over the investments is a very big question. So today, a lot of promoters want to have one, but then if you staff it with only $20 million or 10 million, there's nothing there. You can't really, no one will come, no CIO will join because even the
Hmm.
CIO is looking at growth.
Hmm.
What will I invest in? How will I run that capital? How will I grow? Right? Beyond setting it up, they're also seeing a trajectory that will you give me another 100 million after 2 years to grow your AUM, right? So I think still very early days, Sajid. It's it's just about there, and a lot of you to understand it's a private matter. So a lot of them don't want to be seen, don't want to be heard. They stick to their knitting. They know what they're doing. They're happy in their ecosystems, happy to meet among themselves without really any fanfare. Simple people running the wealth.
What about regulations? Is there any regulations in India for them in terms of uh, how do they invest, or if in an organized setup, the CIOs are they need to be SEBI registered or market regulator registered entities?
No, right now nothing. There's no regulation in particular for family offices because they're just like private investment vehicles, right?
Hmm.
Like just like you or me managing our own money. There's
Hmm.
no regulation for me to manage my own money.
Hmm.
It's just a private office, so really
No,
nothing.
when you professionalize them,
Yeah,
for them, is there anything like a fund manager registration or that kind of stuff, which especially when you're dealing with public markets?
yeah. So I think because it is only one client, there's really nothing there. If you, for example, if you do obviously if you do multifamily office, which is also a big trend
Yeah.
because not everybody has the 100 million threshold. Uh,
So I was coming to multifamily offices also. So what is a multifamily office?
so multifamily office provides the same set of services. Again, investments is 80% of the game. 20% is other softer elements. But it is again for folks that who may not meet the single family office threshold of 100 million. Maybe somebody has 100 crores, somebody has 50 crores of liquid wealth. But they also need the same guidance. They also want to see every month, they want to see all the investments they've done so far in their life. How are they tracking? Did they go up? Did they go down? They also want a special CIO monitoring different line items and monitoring the advisors that offer
Hmm.
products, right? So there have been multifamily offices work with all advisors, whether it's IFL, Kotak, right? Whoever is there in the domain, they pull all that information. So for example, just to give you a hypothetical, say I'm an individual, I have a 50 crore net worth and I want to invest. Now I may work with IFL, Kotak, I may work with Sanctum, whoever, Avendus, right? Now they send me reports every month. Now, can I don't have the capacity. I'm a professional, I'm working, right? To now look at 4 reports and try to make sense of what is my real net worth? What do I own? Oh, I own a house here. I own a house in Panchkini. I have investments with LRS offshore. Right? It get as you get older and you generate more wealth, your complexity of your wealth increases. Now, in a single family office, you have a whole team that is putting this report together every month, telling you, sir, of your 100 rupees, 60% in real estate is divided in these 22 properties. And this is the yield you got from this. In your public portfolio, you have invested in 6 different uh, funds, 10 mutual funds, and this is how they tracked in the month, right? Now, the same desire for the same clarity and that consolidation is required by the guy who is also 50 and 100 crores.
Hmm.
So multi-family offices come in to support that, where it's just shared resources. So maybe they have 20 clients, 40 clients, 50 clients, right? There they don't get paid by the products. They take a fee from the client. So they are supposed to be client driven. They're not like a wealth manager typically comes, offers you a product and makes a commission, right?
Hmm.
When he sells it to you from the person who issued it, whether it's a mutual fund, whether it's a private equity fund or a venture fund or an AIF, right? Or a debt product. Here, a multifamily office is purely driven by the customer and says,
So it's
"We also have
basically
this
a
$50."
annual fee which is which has to be paid. It could be an
Yes.
entity which is managing multiple single family offices together, basically.
So they're managing not single family offices, they're just managing small
Sing-
private investment offices of people, right?
Okay.
And they're helping consolidate. So all the reports will the for example, I would say all my reports, send it to them. They will scrape the data, have an analyst put it all together. Every month I will get a consolidated view of my wealth.
And they will manage the wealth for you as well, basically, in that
Yes, they
sense.
will guide you. They will guide you. They are supposed to guide you in saying, hey, this investment, maybe you need to switch. Maybe this product's not doing great. Just to highlight the ILFS issue happened, this is a red flag. Maybe this debt product has something connected to ILFS, you should get out, right? So these are things that they guide on and they charge a fee. So typically they would have a small fee to make it affordable for anyone.
Coming back to the asset class part of it, in India, many people or many families invest their wealth in real estate, right? As compared to in the West, where they have multiple options. What is the kind of typical investment style for family offices in India? Is real estate the first thing to go to? And when you go and getting a yield from real estate product is something very new in India as well, right? You invest in multiple properties and try to get a yield of 1.5%. That should be good enough for you, But is that one of the trends which you have seen in family office?
So interestingly, because I also founded IK Connect, which is a investment network for family offices in the country. So we
Hmm.
get some interesting insights in terms of what people like to invest in. Interestingly, real estate is a legacy investment. So it's something that people have owned in the past as part of their factory growth. So people, as they grew their industries, they've acquired different land parcels. They've
Hmm.
acquired flats and apartments and office buildings, etc. So typically, you see that typically the promoter has bought an asset in his name and he has leased it to the company. So he's building his own net worth, and the company is happy because the company didn't have to give capex, right? Didn't
Hmm.
have to put out remove money from operations to
Hmm.
buy a building or an office space. So this works very well, and typically you see that when the family office is set up, there are some of these legacy real estate assets. Now, a lot of families actually prefer to not go into real estate today because they feel the cycle. So real estate also goes through multiple 7-year cycles. Now the cycles are also getting tighter. But it's a difficult asset class. It's not for everybody, right? If you do it at scale, it makes sense. If you do it on a smaller level where you own one floor in a corporate park in Mulund, and then that becomes empty, and then you're trying to hustle to find a rental, it gets difficult. So a lot of people have taken that real estate money and put it into the REITs, because REITs have emerged in the last 2 years, 3 years. New products, InvITs have come in, which are yield driven, where you can get the same type of returns, where you have capital appreciation, you have a diversified portfolio, so you're not stuck with one asset in that micro market. God forbid that micro market crashes. It's happened. Um, it's a very difficult situation. You have a large amount of money stuck. Nobody wants to buy the product. You're not getting any yield. Tenant is walked out, right? And so you get into this mode where it's very difficult. And so people have gravitated away from it. They're
Hmm.
now moving more into public markets, more interest in private markets, doing private deals or investing into funds. doing structured credit, and of course, latest flavor being, crypto.
How uh, how big is this class of investors in crypto? Means, do you invest in exchanges and or you're buying current cryptocurrency?
So again, it all depends on the risk profile. So most of them, frankly, are just still evaluating it. They don't want to, because how much will they put in a full risk product? They will put very little. So, and the corpus is very large. So they don't want to be in the news on the wrong side of the law, say tomorrow, because crypto is a sensitive. The government has said it's not legal. You can't own it. Then the tax came out. So the regulations changing very rapidly, right? So typically, what I've seen in family offices, they don't want to invest in that currency, because currency then is still a bit of a vague topic, right? Even though we're saying it's okay to hold, they just, family offices are what I would call camera shy, and they don't want to be in the press. They rather be under the radar, right? And so anything that would go against that doesn't get approved. So they would rather invest into a fund that does crypto, not into the currency, but into the entity, like a venture fund. So you
Hmm.
would own the equity of certain platforms, or they would invest in an exchange where you own equity in the exchange, but you don't own the currencies. So I think it's still the tip of the iceberg. Honestly, it's very early days. I think we are very risk averse compared to the rest of the world.
How do you decide where to register your entity?
So I think it all depends on where you're comfortable. So the entities are typically geographically where you are based. You will have your companies because you have an established chartered accountancy, legal. You have all your help there, right?
Hmm.
But I think we are seeing from a jurisdiction perspective, and to diversify across jurisdictions, political stability, etc. We're seeing people wanting to set up out of the bigger ones, set up out of Singapore, or set up out of Dubai, depending on where they're more comfortable to visit. And again, there are rules. There is LRS rules. There is ODI rules, and so that has actually been picking up a lot of interest. And Singapore obviously has a lot of preferred programs for family offices to come in.
Is there a particular regulations in Singapore family offices which are there, and can that be brought in India as well?
So, from what I understand, Singapore has several different ones depending on the quantum of money you bring in. There's like a 13R, which is for lower capital, 13X, which is like the bigger one. And then you get some preferred, I guess, tax breaks. You get certain benefits. But of course, this all comes with expectations that you will spend X amount of money in Singapore, that you will hire some Singaporeans, that your company is, set up here, right? So there's a fair bit of legal regulation, and Singapore is very stringent about it. It's not easy. So if you want to set up there, there's a lot of paperwork. They are very tight about regulations, about where the money is coming from. So I think it's a nice place for, I guess, Indian family offices who want to set up, because I think once you clear that, even in the global scale, if your family office is incorporated in Singapore, people know the governance is very high.
Hmm.
So your reputation goes up. That if you are able to clear all that paperwork, then of course you are good guys to work with, clean cut, and everything is solid. So I think that has helped it. It's a much harder jurisdiction to set up. So, but it's
Uh,
emerging.
but I've heard that even Dubai has now become one of the centers for setting up family offices there, because it's much more relaxed compared to Singapore.
Yeah.
So what's moving money to Dubai does? Is it easy to invest into global markets from Dubai?
Yeah, I think either way it's easy. I think a lot of Dubai family offices who are set up there manage money, but the real money is still sitting out of maybe a bank in Singapore.
Hmm.
Because of Sharia law, you can have your team sitting out of Dubai, and you may have a bank there, that's managing, maybe it's a Citibank or a JP Morgan or UBS or one of the big global banks, because the Middle East is a very big market for capital. But you will have, to protect the corpus against anything that's switching in terms of law, you will always have it in a jurisdiction that's safe. So I think Dubai is, Indians prefer it because it's easy to live. It is very similar to our lives here. The cost of living is less. The cost of even putting a team together is lower, and it's quite an international life. So I think it's getting more and more popular now, and I think Dubai has also become more liberal in the way they look at the world. And they're welcoming the world. They want to take some of the business away from Singapore, and really build that as a financial hub.
What about structures? How do you move the money? Because there's a liquidity event happening in India and you have to move the money out. So how does that tax structure work in that sense?
That's a whole separate topic, and I think there are a lot more professional guys who can sort of address that for you. There are very good specialists out there who talk through that. And again, comes down to the needs of the family. There's a very strong regulation as well from India, so it's not something that's loose, and I think they've done a good job at it. So I think I'll leave that one for the guys who are specialized in that.
There's also a trend of shifting your base, right? After the liquidity event, you're just moving away from India to maybe settling in London or somewhere, some other place. In that scenario, is it easier for family offices to work around for such a shift?
I think if you plan it, I think anything is possible. I think the world is global today. And frankly, a lot of people are happy even having their capital in India. It's not that, and they still live abroad. So I know friends who spend almost 8-9 months abroad, have homes across the globe. They have one house in Bombay, but they have homes in US, in London, and are probably spend 3 months in different locations. Because their investments are global as well. So they do global investing. And so I think with any good planning, you can plan for all of that. And if the desire is to eventually live offshore, then I think there is a path towards it with the right structures.
Is it easier for a family office to invest in global assets? It could be real estate, it could be public funds, or it could be any other businesses sitting in India?
So I think again it depends on the type of quantum, right? Because LRS limits the investment to $250,000, which in the global environment is not a whole lot of money. So you don't get a seat at the table. Plus, people don't want to see 5 names on their cap table because of that LRS thing. So you're allowed $250,000 per person to go. So a family of 6, maybe parents, husband, wife, and 2 kids, can take out 1.5 million to an investment. But again, it gets imagine signing 6 documents where it should be 1, right? So I think the minute people start thinking about investing abroad, they have to start thinking, and it depends. If the quantum they want to invest is a $10 million check, of course, you can invest. You can invest 10 million offshore. Again, there are things you can't invest. So the LRS money doesn't go into real estate. There are some caveats to where you can't invest. You can't be in a financial services business. So I think that is keeping in mind, forex inflows and outflows for our country. I think again, everything goes through RBI. Everything has to get approved, and the minute the quantum is high, it has to go through the proper channels. But it's doable. The world is investing into India. We are investing abroad. So frankly, I think it's keeping aside what's happened in the last 2 years with COVID, I think we were on a very good track of being a global citizen there.
What is the kind of asset under management for the entire industry? Any rough guess?
That's a difficult one, frankly, but it's very big. I mean, I would say even if you put the 300, 400, even if at base minimum you say everyone's $100 million at least, and 300 people, That's a fairly large amount, but the reality is it's a lot bigger because several of them are multi-billionaires, right? And so, I would peg it. There's really no way to peg it because you don't have a finite set of folks,
Hmm.
but it's a fairly large number there, and it's getting stronger because I think folks within that ecosystem are coming together and exchanging ideas and doing things together. And also the mentality is shifting from being conservative to saying, I do want to do private markets. I do have to be out there. There's a next gen coming. The next gen's desire to do other things is also playing a big part.
So when family offices invest in, say, public or private market, is it done in the name of individuals, or is it done in the name of the family of office name or the entity?
We've seen both. Frankly, it just depends on how they've structured themselves. A lot of the larger ones have a common entity that has everything in it: public markets, private markets, lending, everything, so that if you make a loss in something, it can be set off against the gain in something. I think a lot of the newer ones have it in their personal names because they're just testing the waters. It's a first investment. They're still to get a structure out in place. Because the minute you set up a structure, then you think, what happens if someone passes away?
Hmm.
Does the will, does the will say that these many shares move to whom, right? You can't have those in flux. Today, I could invest in 10 companies on my own without any thought of that because I can just, my estate will move to the next, as per my
Hmm.
will, move in a certain direction. But the minute you create an external, bigger structure, it's going to hold a lot of things inside. And that's a very important piece where I highly recommend folks to, hire the right advisors to give them counsel on that, uh,
Hmm.
and not be in a rush to just, you got money now, you exited something, don't be in a rush to invest it. It's okay to stay in cash. It's okay to
Hmm.
stay invested in tax-free bonds for the near term. Obviously, not in this rate cycle, but I'm saying keep it in a place where don't be in a rush to deploy capital. And there's a lot of people who will push you towards that. But without a strategy, it does not make sense to deploy.
You founded IKEA Connect. Uh, it's a network of professionals and single family offices. Uh, how easy has it been for you to scale it up, give it a organized framework?
Sure. So, just to step back on the journey, right? And so the reason I set up IK Connect was actually out of my own personal experience. So when we started institutionalizing our family office, I realized when I spoke to folks in India that a lot of them were still at early stages. And so I spent almost 4 5 years every quarter traveling abroad, going to family office conferences to learn the best practices, etc. And I said, in India, I know there are these family offices. A lot of them became friends in this journey. They said, why can't we just have an association, right? Because the best learning you realize is not from an advisor that comes from outside, but is actually sitting across the table with a fellow family office, either CIO or family member, and saying, hey, I'm having this problem, or I'm trying to figure out a structure for this in Singapore, or I'm trying to invest in crypto funds in New York. Do you know somebody, or have you done this before, or I'm looking for a new hire in XYZ. And you realize that there was no network like that in India. So I said, let's go create this network, which is a closed door network by invite, where we bring family offices together. And it's been actually a phenomenal journey. It's been fantastic. We've got 40 plus family offices who are members of the network. We meet 3 times a month, either virtually or offline, to discuss investments, discuss growth, discuss how we can help each other. Again, all this is non-recorded, private, one-on-one or one-to-many conversations. And I think it's a fantastic space. And I feel by the time we roll ahead, maybe in the next 1 year, we'll probably be at about 100, which is we want the best of the family offices to be part of this. And a lot of it is giving. Are you willing to share? Maybe you come from a pharma business. Can you talk about the pharma business? You come from a consumer-driven business. Can you help somebody else invest into a consumer company? Will you share your knowledge? It's not about taking. It's about giving and exchanging. Connecting, learning, and sharing with each other.
Hmm. Yeah, it's been a pleasure talking today and understanding the entire family, office business, which is now, it's taking shape into a almost like an industry now. It's Thank you very much for joining us today on VQ Prime.
Lovely. Thank you, Saji.
Thank
Pleasure
you.
was mine.
Yeah.
Thank you.